In 2023, Amazon generated $575 billion in revenue. So I wanted to discuss the factors that is driving that level of growth at Amazon, why customers continue to choose Amazon, and why Amazon is now the second largest business in the world in terms of annual revenue. So let's take a look at the factors that are driving growth at Amazon.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So I highlighted that Amazon's revenue jumped to $575 billion in 2023. That was up 12% year over year. In other words, Amazon increased revenue by $61 billion in 1 year. Most businesses will never generate $61 billion in their entire existence. Amazon grew revenue by $61 billion in 1 year. More importantly, that revenue growth led to profit growth. Operating income tripled to $36.9 billion, up from $12.2 billion in the same time the prior year. So it's not just revenue growth, but it's profitable growth, something I look for extensively when I'm considering investing. It's no surprise that Amazon's been on my list of top stocks to buy in 2024. It's been one of my better performing picks in 2024. Now, one of the reasons that Amazon is driving this level of growth is the stores business. And the management saying that in the stores business, customers have enthusiastically responded to our relentless focus on selection, price, and convenience. 3 of the more important things that customers look for when they go shopping. Think of that yourself. When you go shopping, aren't those 3 things that you're looking at, right? Selection, price, and convenience. Aren't those all important to you? One, if they only have 1 out of the 3, wouldn't that make you choose perhaps another business if they had better selection, even if price was a little bit higher? Or what if a business had significantly more convenience? Wouldn't you choose that business over another one, even if the price was a little bit higher? But now imagine all 3 in the same place and how powerful that is. And you can understand why Amazon's business has grown to $575 billion in annual revenue. Management continues and says that being sharp on price is always important, but especially in an uncertain economy, especially when inflation is out of control and real income growth or disposable income is getting stretched. That's what we're seeing in the last year and a half, in the last 2 years. As inflation has exploded, the price of almost everything is moving meaningfully higher, and that's stretching consumer budgets. And so people are looking to get more bang for their buck, more value for their dollar. And that's where Amazon steps in more so than at other times. In 2020, in 2021, and parts of 2022, price was not that important. People just wanted the thing. And if you had it, they were willing to pay to buy it, right? That's what was important in those years because availability was a concern. Availability was the primary objective. There was shortages everywhere. Things were sold out. And so if you had it, people bought it. Nowadays, people are in a different position. Those stimulus checks that government sent out in 2020, 2021, and 2022, they've pretty much been spent. And so consumers now are facing higher rent prices, higher transportation costs, higher medical costs, higher costs of everything that's essential in their lives. And so that's leaving less dollars available. And that's why they're looking to get the most they can out of each dollar. And so price is now more important, more so than at any time in the last 5 years. Being sharp on price is more important, and that works to Amazon's advantage. Additionally, they continue to improve delivery speeds, breaking multiple company records. So in the US, this result is the combination of 2 things. One is the benefit of regionalization, where they re-architected the network to store items closer to customers. And the other is the expansion of same-day facilities, where in 2023 they increased the number of items delivered same day or overnight by nearly 70% year over year. And this speaks to convenience. Consumers are looking for lower price, but they're also interested in convenience. They haven't totally given up on convenience. Convenience is still important. So Amazon's been able to get both right in 2023. And it's because of that regionalization effort where they brought items closer to customers, and that makes delivery speed faster because the item is closer to the customer, doesn't have to travel as far. But at the same time, that lowers the cost to serve because the item doesn't have to travel as far. So it doesn't consume as much fuel. It doesn't consume as much space in cargo. And so that's allowed a double benefit for Amazon, lowering costs to serve and increasing convenience. And that's really benefited. And that's really one of the primary reasons customers continue choosing Amazon instead of all of the other choices consumers have on where they shop. The other thing they talk about here is the same day or overnight. A lot of items people want earlier, things that are urgently needed like medicines, people want earlier. If you're shopping for things that you might want to use earlier, then if Amazon can get it to you today versus tomorrow, then you're more inclined to purchase that. If Amazon can get you the same item tomorrow, you're going to be less interested to say, well, let me drive down to the local Walmart or the local Target to go buy that thing, because I know if I go in there, I can get it right now. It'll be in my hands, versus if I order it on Amazon, it's going to take a couple of days, right? But if Amazon can say, well, we can get it to you today, or we can get it to you tomorrow, then you're like, all right, I don't want to have to go to Walmart now, look for parking, walk into that madhouse and hope that they have that item in stock and come back home with it, right? So especially if you live in a crowded city like I do, that seemingly simple process can take you an hour out of your day to go and just get something simple from a store and come back, right? Whereas, okay, if you can get it from Amazon tomorrow, you won't mind waiting, right? But if they tell you it's going to come in a week, you'll say, all right, I'll spend the time and I'll go to the store and pick it up. So I highlighted the lower cost, and management goes further in detail here. It's helping, these regionalization efforts are helping lower the cost to serve. In 2023, in the first time since 2018, they reduced the cost to serve on a per unit basis globally. In the US alone, the cost to serve was down more than 45 cents per unit year over year. And that's especially impressive because of inflation. Inflation has been out of control over these last few years, and Amazon's ability to lower the cost to serve despite inflationary pressure truly shows the magnitude of their regionalization effort. They're re-architecting their network, right? So this has been very impressive from Amazon. The execution, I've commended management here several times for their skill in managing these unprecedented circumstances exceptionally well. And I can understand why the company generates close to $600 billion in revenue, and you can understand why I've placed Amazon on my list of top stocks to buy in 2024. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.